with a handful of tech stocks that I've got long as well. So good Friday for me so far. We'll see how it closes out. What we're going to do now is we're going to pass the stream over to Chris Pulver. I've been going for a couple hours here, so I'm going to I've got to jump onto a podcast. So I'm going from one content to the next. But you guys are in good hands. Chris Pulver is going to take it over here from here. Take a look at metals, markets, indices, stocks, all sorts of good stuff. So Pulver is coming up after this. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. Welcome back to a fresh all-time high on the SPY. High number 2 of the year. Question is it going to stay? So we have an all-time high right here. That was number 1 for the year. We poked that level today. The question is, are we going to be fading from that? And this is nothing more but a bunch of noise and a great effort by the bulls to get back to the same highs we saw back in early, when? February or January? Late January. CPI news this week, PPI news this week. Nobody seems to give a crap about higher inflation. Certainly the Fed doesn't. They're just kicking the can down the road for how much longer they're going to wait to possibly cut one time this year, not twice. That's looking like the highest probability. So pretty interesting week overall. Seems like the market doesn't give a crap. But I said yesterday in my final hour sessions on YouTube late in the day before the close, today's daily close and today's weekly close will be important. Monday's a holiday with President's Day. No markets are open. So we've seen the vulnerability of the markets over the weekends. Is there anything that happens this weekend that is going to make it an unfun event for Tuesday's open? I don't know. Futures market, I'm thinking limited hours with President's Day on Monday being closed. So maybe it's Sunday to Monday. Maybe it's not. I'm not really sure. I'll have to check on the futures market hours. But look, one thing I thought was interesting this week was seeing higher inflation data. Okay. So we have CPI, PPI, we have core PCE coming out, not next week, but I think the week after. So I think the final week should be this week here. 1, 2, 3, 4, 5. What am I doing? All right, go to that week. There we go. I'm looking for core PCE. There it is. So Friday the 28th, the last part of the year. There's no leap year this year, right? Is this a leap year? No. Okay, so that's the end of the month. And there's no forecast for it, but that's going to be the big reading, like the official Fed inflation marker, like his core PC going down. Anyway, here's what we're seeing. Okay, so your yearly CPI continues to not go the right direction. So we came in 3%. That's a slightly higher histogram. This trend continues to go higher. Change the color here. Okay, so we're trending higher. 3% on year-over-year CPI is literally no different than where we had this bottom in July of 2023. So kind of nuts that a year and a half ago, we were at the same level that we are right now. You know, and we've been told this entire time, target inflation rate, that's perfect that they have it on the edge finder here. Target inflation rate, 2%. Are we there? Nope. Is it a real target? Not really, but that's what the Fed's going to continue to tell us. So one thing I thought was interesting on the third-party side is Truflation continues to look like it's trending lower. Okay, so I do wonder, like, if our CPI news and data points that we'll see, it's certainly not February because this month everything printed higher from January, right? So February prints from January's data, but I wonder if this recent move to the downside will start to be reflected in next month. So when we print March's CPI and PPI, will that be reflected in February? And this is a little bit more of the reality of like, okay, you know, we are trending again to the downside. We are starting to improve. Maybe. Right? But we're still not back to the lows we had back in September. It'd be pretty nice to see it get there, even if we have a type of move like this with inflation. If we go from this kind of roller coaster ride before we trended lower, if we have the same type of thing, we go back down to the lows, maybe we go sideways a little bit. And if we do actually eclipse that 2.4 later this year, I just don't know how long it's going to take. I'm seeing economists now showing like end of the year 2025, maybe getting to like 2.25. So, whatever. We'll get there or we're not. I don't know. I expect higher for longer. PPI data looks even worse. So the trend on PPI data has been a lot sharper. We bottomed out here. Same thing here. Look at how low this was July of 2023 to now, like way higher. Okay. Bottoming out in September. We've been going higher since September last year. The one promising sign for the markets, two of the big watch list items would be the dollar index and the U.S. 10-year yield. And the U.S. 10-year yield has been showing signs of dropping. It's still not the fresh lows, so it is quite different. Okay, dollar's making fresh lows the last 3 days. So we have 1, 2, 3, nice sharp move to the downside. These last 2 days have come back to retest lows from January, and we're back below that. I still think the dollar catches a bid in here around the 106 to 105.50 handle. So if you are short the dollar, or long currencies against the dollar. So, for example, I have a trade running on Aussie dollar that's up a few bucks. I think I might just take the profit. I talked about this one earlier. I'm just going to take the profit. I'm going to close out my Aussie dollar longs. That was 1, 2, 3 positions. So I took one small loss and I had 2 winners for a net profit. I'm just going to close that out for a win. And then I'll take the buy down here at 60.20. I'll still leave that one. So I'm going to keep this one going. 60.20 is still be a pending buy order. There. I'll take that penny buy at 60.20. And then the Kiwi dollar is back to break even for me. So I'm going to keep that one open. On break even, I'm going to try to get this one up a little bit higher. If we hit between 58 and 58.50, I'll take some profit on my Kiwi dollar. But I am out of dollar CAD. We're finally starting to go lower. This was an unfortunate fake out by the dollar CAD, but I'm not surprised that we are actually dropping. Is anybody surprised that the dollar CAD is dropping? So I was long on like 10 positions, hit my 4,500 target. We had that fake out spike. That was just a big liquidity grab by the market. And it's not a surprise that the market is dropping like that. This is a perfect textbook definition of why Forex traders struggle, right? Because what happens with Forex traders? Well, they see the dollar CAD is topping here, so they want to look to sell, and they put a stop loss right there. And what happens? Get spiked, get spiked, get spiked, get spiked by 100+ pips. And yet it still goes the way you wanted it to go, but your liquidity is part of the game. So if you had a stop loss at 45.50, you're like, surely I'm dead wrong if it goes 50 pips above 4,500. Well, it went 100 pips above it, and then it went 66 pips above it, and then it went 290 pips above it, and it still proceeded to go down. So the trade was still short the dollar CAD at the 4,500 handle, and also look at the same highs we saw for these last couple years. So the lesson here is trade smaller, trade the area. A sell here and a sell here turned out to be the right trade, did it not? Sell once, sell twice, price goes your way. Now you're in profit. Now the game is fun. As opposed to you sell here, put a stop loss, you get poked. Put another trade in, you get stop loss, you get poked. Like that happens so many times in futures and in Forex. Until you learn how to trade a little bit smaller to work these areas better, you're going to continue to be the trader that says the price went my way after I got stopped out. It's a hard lesson, right? But my point is, if you trade small and you give price the flexibility that it needs, this is what happens. You sell here, you put a pending order at these highs, you get spiked in during the weekend, which is a crazy time to do it, but price in fact goes your way. Now you have one entry that is now up probably 300 to 400 pips and another entry that's up 400 to 500 pips. And you survive the nonsense, you survive the noise, and now you're sitting in a bunch of profit. Right? So if anybody has any questions on that, that's how I trade. I trade small and I build positions in areas because it's crap like this that drives traders out of the market all the time. This is why futures traders can't survive. This is why Forex traders can't survive, because the games that get played with liquidity, it happens all the time. This is also why I trade options. Because if I just said, you know what, I'm going to do a bear call spread on the dollar CAD where I can sell a call here, buy a call here, and as long as price stays below this by a certain date, I make money. It doesn't matter that the price spiked up. Doesn't matter that it took, 2 weeks to do it. As long as my expiration is out far enough, I'm in profit right now in my entire position. If I had a bear call spread, and again, I don't do this on a dollar CAD because it's not a thing. But my point is, this is why I trade options on instruments, because I can set up a trade like that where the spikes don't matter. There are no liquidity hunts because my line in the sand is defined and fixed, and price can go above it or below it. It doesn't matter. It doesn't change, right? So anyway, just food for thought. But it's nice to see the dollar weakening. It's nice to see the 10-year yield giving up some gains. Gold, it's actually nice to see that silver is taking a nice leg higher and is probably, like we've been talking about the last couple of weeks, which would be your silver versus gold chart. Look at this one. We spiked up here not that long ago. Look at this resistance. This is such a good chart. Gold versus silver, such a good chart. Good resistance showing that, look, they can both go higher, but I'd like to see silver go higher faster, right? And so silver right now is outperforming. So XUUSD, gold is showing us a red candle today, and silver is making a nice big spike up here towards 33.40. Faded a little bit, but that's fine. I think this silver trade looks really good to get back up to these highs at 34.85. Hopefully getting to a symmetry target for me, which is 35.88. I'm still long on SI futures, and I'm long SLV. Bitcoin, surprisingly, not doing much. Bitcoin is extremely quiet considering there's some stocks moving out there. We've got MicroStrategy still the same. Earnings came in terrible, but it's not traded like a tech stock. It's traded like Bitcoin. So I'm looking to see if this either comes down to find some dynamic support with the moving averages or stays here based around this like 305 level, 300 level. Coinbase, I took some profit on Coinbase this week. We ended up going right back down to the move that I started with, so I'm glad I'm out of that trade for a win. We poked up right to my liquidity level at $300. Ethereum still needs to get its act together. I think we have to wait for a trend line break in Ethereum before we get long on that one. Copper is still looking really good because China is going nuts. Now, copper dropping aggressively today, I'm actually okay with that. China had a nice run. We had Alibaba gapping higher. I added some more shares in Baidu today, which again, I'm good with. Like, I think China has good upside. I know everyone's been saying for the last couple of years it's been uninvestable. Nobody trusts it. I get it. Like, I'm trading China with like eyes wide open, very small risk, but I think the technicals look pretty promising. So I'm long on Alibaba and Baidu. And as long as we don't have like some, AI cyber war type thing that like raises all these geopolitical tensions, right now it's like, look, there's an arms race, and it's not just U.S. Like, China's going AI, Europe's going AI. The world is now like, the buzzword of AI is front and center. So maybe that's what keeps the markets afloat in 2025. It's just like everyone's just spending money trying to improve their energy efficiency. And I mean, whatever it means, is it good for tech? Maybe. Are we going to show that we can't handle some of the demands that are being seen by AI? Maybe, right? Maybe we don't have enough. Maybe we're not spending enough. But until it's like, price right now seems to be pretty supportive. But copper, that's a pretty big drop on copper today. I don't know if there's heavy profit targets here, or just look for price to cooperate. So we have a nice little swing trade. If we pull back at all with some type of bull flag, I think copper still looks good to the upside. I do have a trade down here for a little profit. I'm just looking to see if copper just kind of stays elevated. Again, you got to watch China. We'll have actually more stimulus related news out of China in March, whether they are or are not going to be continuing to support the property markets and support their capital markets. So if they want to keep animal spirits high, then hopefully March is another round of at least massaging the message or actually adding more stimulus into the economy. Euro dollar, you might as well look at dollar index, because if dollar index is down, euro dollar is up. So there's euro dollar. Boom. It's the exact opposite of the dollar index. Flip it around. There's euro dollar. Okay. Euro dollar to me is still pretty limited to 106. If we have any upside here, 105.50 to 106, I would still be looking at a level to reject. Okay. So I don't see the euro dollar necessarily getting above 106 and sustaining a move higher, unless we are really, really, really going down in the dollar. But I can see the dollar index pulling back to 106 or 105. I can see the euro dollar pulling back to this 106 handle. But if that gets rejected, we are probably heading back down to lows. So what happens then? Well, the dollar index would be bouncing back up. Is that good for the markets? Maybe, maybe not. Probably not. What happens to gold if the dollar gets strong again? I don't know. So euro dollar is the inverse. All right, what else? Gold. I'm fine with gold getting a pullback. I'm like craving a pullback on gold. Give me something, man. Silver is totally fine. I build a lot of my positions based on this low as well as that $26 low. Bitcoin, like we said, not much happening there. Copper, you got to watch China. Japan, still just absolute nonsense, sideways. Japanese yen, a lot of volatility this week. We had a really weak 3 days, and the last couple of days have been okay. We're kind of stuck right in the middle. I'm still long on Japanese yen futures. I'm still long FXY. DAX, multiple all-time highs, outperforming the U.S. in a big way. We're just off the highs today. FTSE, 2 days off the highs. Argentina still sideways, looking for a pullback in Argentina a little bit more. China, nice rip yesterday, not quite back to the September highs. So I think, again, until this is able to hit these highs, I think China still is going to maintain bid to the upside. As far as where else we can go for HSI, this is the scary part. I mean, if this is a double bottom, and if we're going to break these highs with any type of sustained momentum, this move is measure and measure. And that's your profit target on China. That's a lot of upside. I can't look at the S&P and think that that's my measured move, right? Like this stock, this index has been beat up so badly for the last couple of years that this I can measure, and it doesn't even get near all-time highs. So, I mean, again, I like the technical optimism of China-related stocks, but I'm not putting a ton of risk in it. I think I have like maybe a 3 to 5% exposure in China as a whole. So if it pays well, cool. I'll turn a 3 to 5% risk into maybe 8 to 10% profit, which is fine. It's great. But again, we have to prove it. So the nice thing is this trend line, let me just delete this for a second. This trend line seems to be holding still. Okay. And if we're clearing these highs, that's a good sign if we can clear that high. So anything in open space here, this would be, look at all this buy zone stuff. This is a yearly. This blue line is a yearly 5-period moving average, and all of my daily time frames, we've been in a buy zone since that rip in September. We came back and retested the lows. We have used that really nice dynamic support. So, getting long here at the 200 moving average seemed to be pretty good entry for pretty good timing. And if we sustain this buy zone and make higher highs and higher lows, then the nice thing is I can measure this move, and we've got plenty of upside here. Okay. EWZ is Brazil. I'm long that. Apple, back up to where we started after earnings. Amazon, down to 227. We'll see what's going to happen here. I mean, Amazon recently at all-time highs at 242. I've done lots of rolls. I'm just going to keep generating income on the shares I have. I'd like to see a bit more of a sell-off on Amazon because I'm going to start adding in some more income trades. I got some ratio spreads. I'll still trade some more of those. I might do some 111s as well. Google, I did buy a little bit at 191. I've got other levels in. I've got a bunch of ratio spreads down here. Meta actually poked an all-time high again today. Not sure when Meta's going to crack, but at some point we've got to hit this 200 moving average. So I'm not that interested in Meta. It's too high for me to like the trade that I would be looking at ratio spreads down here. I suppose I can keep them below the 200 moving average, but I'm not that interested in taking ownership of a stock of $550 either. So I'll probably just try to generate some income trade on options, but it's expensive enough that I'm not chasing it. I want to see a dipper pullback or correction first, then I can get a little bit further out of the way. Microsoft, I like this structure. I mean, I'm doing a lot of income trades down here with some support, resistance, all-time highs. So I've loaded up some trades out of the way. Hopefully those stay safe for some good profit. Netflix, we're up to 1043. I've got a broken wing butterfly out to the 28th, which next week will be the 21st expiration. So this is going to be a close one. I've got a pretty good trade on here, potentially making like $1,100 in a profit trap. But the issue is we might be going beyond it. So if this doesn't stay in my profit trap, so let me look at the analysis section here. So right now, you're looking at this live price, like this is where price is at. I'll put this in yellow. So that's where price is at, this little green flag. The only problem is there's still some time needed in the trade. And so this is where my live P&L is at. So I need this to reflect more of like the real equity curve, which is that being my real curve at the 28th of February. So by the end of the month, I mean, it's pretty simple. If Netflix is, less than 1030, good profit. If it's at 1040 to 1040 to 1045, I still got a profit trap here. Anything greater than probably the 1045, 1050 handle, not so much. So I'll keep an eye on that one. It's out for a couple more weeks. Hopefully we see a little bit of a fade. I'm going to check and see how this one's trading right now. It's probably upside down a little bit. Netflix is down about 280 bucks. So, my max risk is about $900. My max profit is like 1,100 and change. My expected credit is 100 bucks if price falls. So, trying to turn it into a nice little trade. I'm a little surprised we've been melting up, higher through earnings, especially with another crazy high bar count. So, I'm hoping my timing on this one out to the end of the month is actually good for some like month-end profit taking, but we'll see. I'll have to hang on to it a little bit longer. All right, NVIDIA 137 coming back to fill this gap. I've got a trade on this one that I might look to close. I might have gone out farther on NVIDIA though, so this probably the time is probably what's killing me the most. That's a ratio spread. Let me go to my other trades here. This one I have a bull call spread on, so it's a 126 by 130, but it's out to March. So right now it's up about 150 bucks. It's not awful. I got into the trade. I mean, I could just take the profit. I mean, I don't really want to wait to March. I mean, are we going to make all-time highs by March something? Yeah, maybe. But I guess my concern on a video would be something like this. Here's a high, here's a high. What if we do this? Come back to the same high and then drop back down again. And this has to be like a building, an accumulation for NVIDIA, you know? So I think if I've got the money right now, I'm just going to take it. I got into this trade originally. So this 126 by 130, I think I got into it for like $1.70 something. So 11 minus 922, got in for $1.78. And right now it is trading for 252. Oh, man. Can I close it at 255? Take a little bit of profit there. I'm in two contracts. I mean, mid price 255. Come on. I'll penny this down. I'll try to get out of here at least 250. 253. All right, 250 should fill. 251. All right, just got filled at 251. There's my 126 by 130. I'm going to take the profit here. So closing 251. Filled. Okay. This actually, yeah, I'm going to take this trade off. So 251 is not bad. Oops, wrong trade. 126, 130. Okay, let's do this. There, 251. Okay, and then on this account, still have a 126 call. Got into for 11 bucks and is trading for 16. That's an awesome win right there for another 500 bucks. 16.85, hopefully. Cool. So that was a combo. That was pretty nice. $11 call that I closed out for 16.80, and then my $1.78 debit spread that I closed, debit spread that I closed out for 250 or 251. That's a nice little win on NVIDIA there. So a little bit of management. Let's go NVIDIA. There's my 126, 130. 251, hopefully closing out at 251. 250. Okay, taking profit there. Where is my All right. I've got a 132. Okay. Let me see what this is trading for. So if I go March 21st, 126 by 132. Okay. I've got to do a quick alert update. Just give me a second. $126. It's a 321 expiration. 126 buy call by 130. Sell call for $1.78. $132 sell call. That'd be got in for $275 debit. Closing for $365. Okay, I'm going to keep moving here. So got that trade filled and closed. That one's filled and closed. Filled and closed. Here we go. Just going to keep working through. Close these out for 2, hopefully 51. 250 mid. Taking a couple bucks there. Filled. This one does not have NVIDIA. No worries. This one does. 126, 130. Perfect. I'm going to close out this one. So close out the 2 contracts for 250 and close out the call from an 1147 to 16 and change. Close at, even better, 1695. Let's try to get 17. Be generous. 1705, even better, Phil. Awesome. Very good. Okay, 250. I should be able to get a couple more cents here, maybe 252, 251. Nope. All right, filled at 251. All right, little bonus penny there. No NVIDIA there. That's fine. This one, NVIDIA, 126, 130. Close at 251. Take it. Nope. All right, 250. Taking the win. So 14th is the exit. Okay, so NVIDIA's closed up for some profits. I'll take it. That way I don't have to worry about this. I also had an iron condor, so I sold a bear call spread, bought a bull put, or sold a bull put spread down here. Price came right back in the middle. That was perfect for profit. That ended up closing out for about an 85% winner, I think, of the max profit. and then have my ratio spread, which still looks good. I'm just not sure if we're going to deal with more indecision, right? It's like, is NVIDIA going nuts to the upside? Probably not. NVIDIA is probably going to be, chopping around, or NVIDIA is probably going to be going sideways like this. Maybe it's going to build into something like that and then it breaks higher later. I'm not sure, but I'm just going to stay out of the way. But I'll take it. Tesla, I'm still looking at some accumulation on Tesla. It might not be, super fast. I mean, that was a nice little rip to the upside for the last couple of days. I still think this is a good accumulation zone. So look for some type of consolidation on Tesla. If we break and go higher, I'd love to see a run on Tesla to all-time highs. Okay, good stuff. All right, let me get back to some comments and questions. Okay, good. I saw some requests on other currencies. Aussie dollar already did. I'm out of Aussie. I'm just gonna close this one down. So I took my profit on Aussie dollar. I thought a good spot to be protecting profit. So I entered in here. That was trade 1, trade 2, trade 3. This trade are in profit. So I'm taking the profit. This one's a small loss. I'm taking the net winner. That way I don't have to deal with, whatever the dollar's going to do. Look, I think the dollar is fine dropping. Okay. I think that little spike we had on the weekend is a bit of a kind of an outlier. So I'm looking at this high, low, lower, high, lower, low. And if we come back in and settle to this support, I think this is where the dollar is still well supported. So if the dollar doesn't necessarily break lower than this this is the daily chart, by the way. So like a 144 200 moving average, if the dollar doesn't break lower than that, I think this dollar catches bid. The way this has fallen the last 2 days, especially, if we fall more, I think this dollar, when it finds bid, then we're coming right back up to where we started. So if you've got anything short dollar, I would be looking to move stop losses, protect some profit. If you're happy with the profit, protect it. I think the dollar has a chance to maintain a bid right here and probably head back up into the same range highs. So if we go to this low and then form a little bottoming pattern, work our way back up to the same highs again, I could see the dollar being a range. Bitcoin's a range. We're going to find out what the markets are made of coming into today's close. So today's close, this week's close, Monday's a holiday, so we'll see what Tuesday looks like. But if the market doesn't hold these all-time highs, okay, here's where we are for today. The SPY is sitting, interestingly enough, at the backside of this trend line. Not that this is like the proper trend line, but we're sitting here back at the all-time highs, right? Is this justified to be like, there we go? I don't know. Because if somehow the market fades it today, we're probably putting in another high, and this market's going to be chop suey again, possibly heading back down to range lows. I don't know. I'm skeptical of highs right now. I really am. I will continue to trade up the way I've been trading. I've hit several all-time highs for the portfolio this year already. It was up to like 177. You already see a big swing, but my previous high was 144. So my high for the year was 144K. Now I'm up 164. I was up into the 170s early this morning. So clearly I've faded and given some back, but off to a pretty good start for the year, and hopefully a lot more to go. But I haven't really made any big directional plays. I'm long silver, sure. I'm long gold, sure. Am I aggressively on those? No, it's really a carryover from last year and running with some of those profits. I'm long on China with Alibaba and Baidu. JD is looking pretty good. I actually might look at this one again for a roll. We're trading at $41. It should be worth it. It should be worth it to roll it. I have some shares in this stock. I'm going to get it called away and make like $500 or $600 if I don't do anything. So right now I have some shares. They're covered at 39, also collared at 30. So I want to see my break even's like $35 and change. If I roll this by a week, what? There we go. It's like I roll this, I should get some credit. So if I roll this by a week, can I get rid? I can get another 40 cents in this one, which is another $200 of profit if price stays above 39 bucks. That's at least to the earnings print. If I go out farther, so we have earnings, it's March 6th. So if I go to the expiration, I am subject to, earnings, right? If earnings is good, then I'm going to cap my upside. If earnings is bad, then I'm exposing myself to that potential earnings catalyst. I still think this stock has room to get up to 47, 40. I mean, the earnings have been proven to be pretty solid since these lows. I think it actually, you know what? Fudge it. I think it's worth taking the risk. So I'm going to go out even a little bit further, the earnings. Let me go out another week. And I'm going to see if I can roll this up $1. So from 39 by 30 out to the 14th, I'm going to go to the March expiration, the monthly, and see if I can roll it up $1 and still get a nice credit for it. So $1.20 to keep it the same, or 65 cents to roll up another $1, or even, yeah, probably this one. So I'm going to roll my strikes up $1 and try to get another 50 cents on top of that. So that's another $1.50 or so, $1.55 times 500 shares. I've added another $775 to my profit. That being said, I'll take it. Let me see if I can get this thing rolled for 60 cents. Let's go. I mean, the bid mid ask is fairly wide, but 60 cents should be doable. I'm going to try 65 right now. So this would be a Feb 28 expiration rolled out with the. I'm going to keep the put strike the same at 30. I'm going to keep the collar. Okay, and then I'm going to roll up my call to 40 for an extra $1 of income and more time, so I can hopefully roll this for a net credit and get the extra upside profit. So I'm going to try this for 60 cents. I'll try it for 64, which is right under the mid price, but let's see if this works. 64 not filling. Hopefully 60 cents will take. 63. I've done this in the last few weeks, and I have not gotten this thing to fill. So 62 cents not filling. I mean, I can accept 32 cents, but I'm not really stoked about that. So I'm gonna try to get something in the mid price. 60 cents. Son of a bee, man. All right, 50. I mean, maybe 55. I'm willing to take at least 50 cents. I'll try to take at least 50 cents. I mean, the mid price is 70. Come on, man. 58. 57. I'm hopeful for at least 50 cents. If I whittle this thing down to 50 cents and it still doesn't fill, then I might just look at taking the freaking bid price, which is lame. 55. Come on. You turds. Still working it. 54 cents got filled. Okay, so that's a roll of 54. All right, so that account is accounted for. Let me log into my tracker here. Overall, 26.38 and another cover call. Chart I'm going on LMT. That's Martin hitting 425. Not sure if that's high or low, but we'll find out. So rolling. Darn it. So JD right there. Ratio spread. Okay. All right, JD ownership. Rolling out to the March 21st expiration. So I have the $40 call and the $30 put. So it's a new collar trade, and I rolled this successfully for 54 cents credit. All right, I've got a couple more accounts to do that on, so that one is good. There's my 500. Oops, my 500 shares. There's my 30 by 40. That $30 put cost me 22 cents. So I'm going to keep track of that one in case I can also increase my or lower my cost basis if I need to. So $30 put cost 22 cents debit, just in case the earnings print is bad. But I still like the trade overall. Okay, I'm not skipping over comments. I'm just kind of in the zone getting stuff done. So give me a breather. JD's fine there. JD fine here. This is 500 shares, 30 by 39. Let me look to roll this one. So roll. I'm going to go out to the March 21st, up to $40. And I got filled for 54 cents. I'll try to get 55 right here. Not filling. Be generous. Give me the same fill at least. 54, hopefully. All right. I think I put in 53 and it filled me at 54. Yep. Got filled at 53 cents. Okay, fine. This account, no exposure. No exposure. This one, no exposure. No exposure. This one I know has 500 shares. So my 30 by 39. Quick roll. Out to the 21st, up to 40. And 53 cents. Come on, you. Yep, got filled to 53. Good. Okay, so same fill. This one, no exposure. No exposure. No exposure. And JD here, no exposure. Cool. Okay, that's it. So that brings my break even down to around $26.38. 26.38 on a stock I'm trying to get rid of at $40 on 500 shares. That's a good chunk of profit to make. So I'm adding money to it. So this trade, the reason I did this is I make an extra $1.53 on 500 shares. So I've got an extra $765 with 3 accounts. So another $22.95 to my bottom line if price just stays above 40 into March. And I'm looking for kind of the animal spirit situation in China. You know, JD, in my opinion, has this big swing. We're consolidating here. I can see us chopping around, but if we start to break higher, then I get it. Like I'm capping my upside at $40, but I'll take the net profit, right? All right, so I'm good there. That's kind of the overall China stuff. It's like K-Web is gapping higher. I still think the progress looks good to get back to September highs. FXI, same thing, gapping higher. Looks good to get back to September highs. I'm just going to stay the course and kind of dollar cost average into what I like. Alibaba, I still like. It's fading back. That's fine. Pulling back here, that's fine. I'm not going crazy on China. I've already had exposure in this. I'm just trying to monitor and also manage some positions. But getting back to these September levels, pretty good profit target, right? Getting on Alibaba back to these September levels and beyond, pretty good profit target. So I think there's still like work to come. But to me, it looks like the upside is worth the risk. All right, other stocks here. Costco over $1,000. What is this one? $1,100 pin trap. When's the expiration on this one? I got to trade on Costco. Let me take a look. Costco up some bucks on this one. Let me see. I'm not sure which accounts I did this on, but let's find out. So does that trade of Costco? No. This account? Yes, up $378. I like that trade. So this is a 1111. It's kind of a call condor. Here's what it looks like. So this trade for Feb 28th. I'm going to look to close this one down. Go to the curve. Gosh darn it. All right, let me build this out real quick. I'll show you what this trade looks like. Got some interesting flows coming in today. Maybe that 615. If we break higher, like 615 is in the cards today. Just hard to be a 0 DT and say like we're going up today by $5. Anyway, let me build this out real quick. So this trade is Costco. Got 4 legs in it. I think I'm going to take the profit. Expiration is the 28th. I'll move this over in just a moment. So I bought the 1090. So I bought the 1090, sold the 1095. And then I sold the 1100. And I bought the 1120. All right, so this is the trade. So this is the trade. It's trading for, $2 credit right now. I got into the trade. Let me see what I got into this trade for. So initially 1, 2, 3, 4. I should have pulled this trade in for a credit, and I'm looking to see what it's trading for right now. Should be offering some profit. This might not be as profitable as I think because the better profit's probably on the ratio side. Like the 111 that I have down here is probably showing more profit, but let's find out. So this goes out another 2 weeks. Minus 5.86, plus 504, plus 4.32, minus 2.35. So I got in for $1.15. And right now, okay, so I'm actually upside down in that trade just a little bit. That's fine. Upside down a bit. All right, so nothing to do on that one. The other side of this trade is the 111. This trade is in good profit and about 80% of the way there, but this one should be worth a couple bucks. So overall net positive on Costco, that's fine. Walmart, I might get the stock called away at 100 or 105. Let me see where some of my covered calls are. Walmart shares and covered at 105, 105, 105, 110. So got some upside there. That's out. I mean, I'm fine if Walmart gets called away at 105, $110. That's a good income trade. Walmart's paying me 84.65 right now. Still some more profit to go. So got some upside. That's fine. Another one that's probably due for a pullback. Nike, I've got a 65 and a 60 put. Home Depot Lowe's not doing anything. MasterCard floating around all-time highs post earnings. Visa continue to make all-time highs. Amex off of all-time highs. Johnson & Johnson looks pretty good with 140 puts. Progressive, holy shnikes, man. What a freaking dip that was, huh? How about that dip? So ratio spread goes out to next Friday. That's looking good for full profit. That should be like $1 or $2 income on PGR. CB, not looking as good, but this one was a much better premium. This was out to May for a couple of bucks. Palantir, still making highs. Good for it. Carvana, still making highs. Good for it. I'm not chasing some of these stocks, but I'm sure it's nice. Is anybody in this stock, by the way? HIMS. I bought this stock at $5, and I was pretty stoked when I got a $5 stock that paid me up to 20 bucks. I thought that was a pretty good trade. But little did I know that 5 became 63 a few years later. And now it's just la la land. But those stocks do exist. Zillow looking a little bit better. Sector-wise, we've got some sectors still outperforming the indexes this year. Okay, we're still sideways at the highs. So today's close is going to be important. Today's close on the daily, today's close on the weekly. We go into a holiday weekend. No markets open on Monday for President's Day. Okay. I've been long since Aussie dollar since yesterday. Cool. I've been long for like 2 months. I just closed out my profit. It was a small little, it was 3 trades, 2 scalp winners, 2 net winners, I should say, one small loss, but I'm out of it. I'm not gonna, I'm not gonna play games on the dollar. I don't think the dollar's gonna have really any big trend. So I think DXY is, if you got some profits, great. Dollar comes back to maybe the 106 handle, which is another 60 points lower, maybe 105.50. But I think this area between resistance, offering some support in here, I could see the dollar pulling back and finding some, efficiencies there. So if you got profits on the dollar over the next maybe, 60 to 100 points, I'd look to be taking some profit. Okay. I think I'm going to wrap it up there. I got another class coming up in a few minutes. How's everyone's week? overall, not too shabby. Fresh highs on the portfolio this year, multiple times this week, and no complaints on that side. Protected some profit today, had some winners. So booked some winners this week. Actually, quite a few. Had winners on, trying to think here. Let me go into booked winners on Upstart, Trade Desk, Coin, AppLovin, Roku, Nvidia took winners on. Trying to think what else. Had a lot of good trades. I was 6 for 6 this week on SPX for some scalps. I didn't trade much on Wednesday because I was out of the office. So for 4 days trading, it was a pretty active week for some good income. And I'm monitoring. I'm watching my Netflix trade. I'm watching Costco for the next couple of weeks. I've got some Japanese yen futures long. I'm long gold. I'm long silver. I'm still trading some Bitcoin levels. Watching the index for the close today. How do we close today in this week? Time will tell. But the headlines will say second all-time highs. I'm pretty sure everything's going to be looking bullish today. What's MarketWatch say? Flirting with fresh high after retail sales report a strong win. It's like, I mean, if you see optimism in the headlines, it's like we're no longer like fanning the flames of worry. It's like all-time highs. It's like that's all people need to see as general consensus to be like things are good. Things are great. I'm a little cautious. The nice thing is dollar is down, the US yields are dropping, and bonds are going up. So that's a good looking sign. If you're long TLT, which I know Nick has some exposure there, as do I. My 65 by 91. I mean, honestly, this is probably looking pretty good for some profit. So my TLT position is currently up around $7,100, and I mean, I may let it get called away. I might look to roll it out as well. So some of these, I'll just go into one individual account here. So TLT. So I bought a deep in the money call at 65. That's the strike price, and I paid $22.50 for it. But getting it called away at 91, it's like I'm up, almost $1,000. So that was kind of the plan. Is if it does get called away above 91, my question now is like, could I roll this? I mean, I could. If I can roll it, I want to see if it's worth it. So if I roll it out by another week, do I get any premium? We're about to find out. I mean, if I roll it by a week, I get 7 cents. No thanks. If I roll it out to the April expiration, I roll it out by about 20, it's about 17 days. I get 30 cents. 30 cents, it's another $120 to my bottom line. Okay. I probably want to find a sweet spot. This trade, by the way, is out to 2027. So I'm not really worried about the time of like rolling my sell side because I bought the call out to 2027. So there's plenty of time in the call. Question for me is it worth rolling? And I kind of like to roll it out and up. So if I go out more time, can I roll it up? Like I'd have to roll it up to 92. I get it for 4 cents debit, which means I have to pay for this to roll it up and give me another $1. Now, granted, I can roll it up to 92, get a net 95 or 96 cents of profit, which on top of what I already have is another, $400 on the trade. So it's fine. Like I don't mind rolling it for a debit, but I don't want to. Right. So let me see if I keep it at 91. I mean, that's not too bad to go out an extra 17 days and grab 30 cents. It's another $120. We are now, I mean, I want to keep this pretty simple. I'd like to keep this call level to around a 20 delta. A 20 delta gives me some price appreciation. A 15 delta means I'm pretty bullish on something. Right now, I started this out around a 20 delta and it's trading for a 41 delta. So price has clearly gone up a little bit on the TLT, which is good. Okay, so I will deliberate on this. I mean, again, 17 days is not bad for another 30 cents, but I don't really want to go out too much farther than that. So that's April 30th. Like, that's not bad. I might roll this up to 92, get an extra 17 cents. That gives me another $2 of profit plus 7 cents. I think I'll do this. I'll roll my strikes up to 92 and roll it out by another 30 days. And I mean, it's not the best credit, but I get the extra $2.17. So 2.17 times 4 contracts. I make another $868 on the trade by April. Okay, so I'm going to take this. I'm going to take this roll. I'm going to take the the 91 call that I'm selling against my 65 long call, and I'm going to try to roll it out in time by another 30 days and roll it up a strike, so I get an extra $1 plus the credit. So hopefully I can get this filled for 16 or 17 cents. See if this will take. 17 cents not filling. Bid is 16, so it should fill at 16. Filled at 17. That's fine. Okay. So this one, TLT, I'm going to roll this one as well. So quick roll. Oops. I just need to roll the call side out. So the 91 quick roll. Roll this out to the end of April. Roll this up to 92. Get this for 16 cents. Oh, it's not. Okay, it's not filling. Hang on. Let's go 16. Okay, filled. This one should have filled as well. Let me double check this. All right, so there's my 65 by 92. That one's officially rolled. This one, 65 by 92. That one's officially rolled. Good. Same thing here. Take this one, roll April 30th, rolled up to 92, 15 cents. Getting filled for 15 cents. Fine. This one, 2 contracts, same situation. This one I'm going to roll out to the 30th, up to 92, 15 cents. Good. 91, out to the 30th, up a strike, 15 cents. Come on. Seriously, dude? I mean, I'm getting filled below the frickin' mid price. TLT. You're supposed to be liquid. All right. I'll take the penny off. What? All right. I'm going to let that trade sit at 15. That's stupid to not get filled. Okay. Getting filled a partial. Getting filled partial. All right. Let's see what that did. So that's now 65 by 92. All 4 contracts filled. Okay. That's weird. Let's take this one. I mean, they're all filled. That's the important thing. So between 15, 16, 17 cents of getting filled on that roll. Okay. I mean, I'm seeing comments. Like, seriously, when I've got 100 positions open, I can't catch every comment. So ball out. I don't know what you're asking on that, SPY 600 by 590. I see that you're talking about, Lee's asking about, the DAX, and Simons was mentioned in my session yesterday, right? So I don't know what that 600 by 590, it's a bear put spread, or is it a bull? I don't know what the trade is. So A1 Central, is that a real handle? Is that an imposter? Do we have an A1 Trading Central? Is that a real thing? Chandler and team? Okay. I just didn't know if that was like somebody impersonating or if that's like for real. All right. Let's see. Gonna roll this one out to the 30th, up a strike, 15 cents, filled. Hooray, that was easier. Roll, up a strike. Oh, dang it. Don't change the quantity. Roll, out to the 30th, up a strike, 15 cents. Fill the order. Roll. That one got filled. This one's still pending. Why, I don't know. This one may not have the TLT exposure. That's a new account. That is a new account. New account. This one should have it. TLT for 2. Out to the 30th. Up a strike. 15 cents. Pending. Well, son of a gun. All right, so I have one account that didn't fill for some reason. This one. Filled. Still pending. I mean, I don't know how this isn't filling for 2 contracts at 15 cents, which is 1 cent below the bid price. Tasty. I'll go 14 cents. I'm going 15 cents. All right, I got to let that one marinate. That should be covered for all those. So I'm going to update my TLT tracker, and then I got to go. I got a class in 10 minutes. All right, diagonal spread. Sell call. You see where we're at here. So the 65 long, 91.21. So break even's at 86.32. Added. All right, just got filled on that trade. Good. All right. So rolling to the April 30 expiration and rolling up to 92 sell call for 15 cents credit. So the 21.17 is my net debit, which puts my break even 65 plus 21.17. Break even is 86.17. 86.17 is my price. If it gets called away at 92, 583. So I make about $2,300 per account. So that's decent. 11 accounts at $2,300. It's 25 grand on TLT. Not a huge position, but I'll take it. All right, I'm gonna let you go. Last little bit for today. Like I said, watch the daily close, watch the weekly close. We go into a holiday weekend. Can the market hang here at all-time highs? Or are we giving some back? If we give some back, well, better luck next week. If we stay here and we, still get directions for the week and we try to push higher, cool. We'll find out. I mean, I was really surprised this week with the CPI news and the PPI news combo that this market's like, whatever, man, this is a great sign of all good things to come. But it could be the market's attention is elsewhere and the blinders are on, and it's all about AI and its optimism and how hopefully business friendly and growth friendly this administration is, and that the global economy is starting to broaden out a little bit. It's not just all concentrated in U.S. tech. Okay. All right, cool. All right, everybody, thanks. Have a great weekend. Happy Valentine's Day. Go spoil your loved one. All right, see you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.